The panel discussion will be facilitated by Ms. Sakaguchi Kazuko, FinCity.Tokyo board member, president and chief executive officer of AllianceBernstein, Japan. Thank you very much, everyone. This is the final panel discussion, which we would like to start. We'd like to thank you very much for staying with us for a long time. So without further ado, we'd like to have them introduce themselves briefly, starting with Mr. Hamada. Thank you very much. Good afternoon, ladies and gentlemen. My name is Hamada. In 1987, I joined Yamaichi Securities, which is no longer exists, and I worked in the Hiroshima branch in marketing. Yamaichi went bankrupt in its 100th year, and I was the last labor union chairman. And I struggled to deal with issues such as treatment for the labor union members and re-employment. In 1981, I joined Sompo Japan, Yasuda Fire and Marine Insurance. And then after that, I joined Shinsei Bank. In these two companies, I was seconded to the investment subsidiary. And so I started the retail business from scratch. And then after that, I went to Société Générale Asset Management. It's inconceivable in Japan. Of the three mega banks, the two, Crédit Agricole and Société Générale investment companies were integrated. It is now known as Amundi. It's the largest investment company in Europe, and I was involved in the business integration. And starting 2010 at the BlackRock, I was responsible for the retail business. And in 2020, in April, after a lapse of 22 years, I went back to the securities business, and so presently I work in Mitsubishi, which is Morgan Stanley, and I am overseeing retail and corporate secondary business. I look forward to having this discussion with you. Thank you. Thank you very much. Could we turn to Ms. Kito, please?
PwC 税理士法人 My name is Kito of PwC Tax Japan. My career has not been as dramatic as Hamada-san, but after working for an operating company in 1995, I joined PricewaterhouseCoopers, current PwC Tax Japan. And since for 30 years, I have been working as a tax professional. Remember the financial Big Bang? I have observed the phenomenon from the tax perspective, which I truly appreciate in hindsight. My expert field is finance and investment fund and structured finance, so I've touched upon all aspects. And in the early 2000s, when funds landed on Japan, for the first time, there were several different parties, activists, hedge funds. I had the opportunity to observe them as structures. So here I am. We have a business succession division, so today I will touch upon family office and high net worth. This is the theme, as mentioned by Sakaguchi-san already, so I will be sharing my opinions on those subject matters. Thank you.
Thank you very much to the two panelists. So I'd like to, without further ado, ask questions to you, Mr. Hamada. First, you established in 2021 in April the Wealth and Middle Market Business Unit within MUMS, Mitsubishi UFJ Morgan Stanley, as a business targeting high net worth individuals. At the time, I remember meeting you for the first time and you telling me that you will make the goal-based approach of the United States take root in Japan, and you were very enthusiastic about this. Specifically, what was the objective then, and what was the plan then? Please tell us about it. Thank you. What we tried to achieve initially was that our company was unusual in the world. The top tier financial group of the United States and Japan jointly created a financial company. And so we wanted to bring to bear all of the forces of Morgan Stanley and MUFG to create a full-scale, serious wealth management business which provide world-class services. And we wanted to establish in Japan so that it will contribute to the well-being for the clients and also contribute to the growth of Japan. A world-class service full-scale wealth management businesses is what we want to establish. As to why we chose this goal, to go a little bit into the background, please turn to the first page of the handout. Presently, we see NISA, and there's the issue of the 20 million yen. NISA is very important for the general investors, for the general public. There are signs of a change, a move from savings to investment. But when we look at the high net worth individuals, services are still insufficient, and we're still not seeing signs of that change. And this is a familiar chart. 51% and 12%, 50% in Japan is deposit of Japanese financial assets, whereas in the United States it's a lot smaller. If we look at the high net worth individuals of the United States who have over $500,000, 11% is the total in Japan. Those who have 50 million, that's about 9% in Japan. So the top 11% in the United States have 83% of the investors' financial assets. In Japan, it's 38%. So if you could remember these figures, so in the United States, the top 10%. Also, the databases are different, so we're not comparing apples to apples, but you can still tell the trend. The top 11%, and the ratio of cash and deposit is only about 10%. And that has impacted the average. So people think that the general public in the United States all have no cash. But the middle and lower class public have cash. But the top affluent people do not have a little percent of, small percentage of cash, whereas in Japan about 60% own cash. So to move savings to investments, in order to do that, we have to see changes among the high net worth individuals. Only when we move the high net worth individuals will we be able to see change. If we could provide a good service, I believe that will bring about change, and that would be give us the edge for our business. And if we look at the trends in Japan, and according to our survey, those who have over 100 million yen, or maybe over 150 million yen. In terms of number, we rank second in the world in terms of the affluent. You may have extreme affluent persons in China, but we have a large number of high net worth individuals. And we surprised when we talked to Morgan Stanley. Of the total assets, real estate accounts for 27%. In Japan, the figure is 71%. So Japanese high net worth individuals have cash, but they have a lot of real estate. So if we want to engage in high net worth individual business, we have to look at the total assets inclusive of properties. And so we have to, if we can provide proper service targeting this, there'll be a change, and our business will change, and it will make our customers happy, and it will lead to economic growth. That is my feeling. Thank you very much. Looking at the graph you showed, the high net worth individual market, if we look at that alone, I believe the prospects for Japan's future is very bright. But the situation is completely different between Japan and the United States. So in pursuing change, it's probably was not a smooth process. So what kind of action did you take? Could you go a little deeper into this issue? First of all, the high net worth individual business, what is it? We try to sort out the nature of our business. We use the business model of Morgan Stanley, and so we looked at our business. From step 1 to step 3, we've arranged it Japanese style. So we have this broker business which we had to cater to. Step 1, that's related to the investment of customers. We have to become a proper investment manager. And so here is where proper planning is important, and portfolio solutions, allocations has to be properly done. We cannot market without technology. It's like driving without a license. And so we have to make everything visible to the customers. So step 3 is other than investment in financial areas, assets and asset succession loans and insurance. Inclusive of M&A, we needed to provide proper service in these areas. And the last step, which is step 3, that's services other than finance. For example, finding spouses, people to marry for successors of big businesses. These do not translate into earnings, but we have to support properly in non-financial areas. And only when we do that will we gain trust, and we will be entrusted to invest. And what is important is the customer's goal-based approach. We say goal-based. From young employees, we ask the customers about their goals, and they do not answer. And they ask me what we are to do. And it's hard to answer. When you ask them what their goal is, maybe they won't be able to answer. But when you ask them what they want to do or what problems they want to solve, what's their wish, then there is a lot of wishes they have, and so they're able to answer. So when we ask for goals, we should ask for them their wishes, and we have to list this up and to provide proper solutions. And we try to define our work in that way. And to explain very briefly, first we have to change the performance, human resources performance evaluation. We have to dispense with earnings quota from the performance evaluation. If you pursue earnings, so you'll be bound by that, and so you will not be trusted. And so we have to change the ways of evaluation. And AUM is one barometer of trust, and we have to look at AUM and investment, of course, but in areas other than investment, to what extent services were provided, and customer satisfaction. We have to use a third party to evaluate customer satisfaction. And so we also used another indication of a ratio of cases where we were the primary, where we had the primary relationship. And so we have dispensed with the earnings objectives. Compared to Americans, we see more transfers in our business. We could have PB groups. We had PB groups, which are professionals, which are now transferred. And we introduced a long-term assignment system for generalists to increase the ratio of those who are not transferred often. And secondly, is a segmentation where the high net worth individual customers would have in-person meetings with their employees, and the mass affluent would have remote services. And lastly, the technology. It's an end where people like Akemi indicated what was wrong. We need to do digital analysis to analyze portfolios of customers. And secondly, communication. When we engage in communication, not rather than introducing products, using digital communications, webs and chats to interact with customers. That is how we brought about change. Thank you very much. When we look at the 3 steps, you are a large financial group, and to change the human resources performance evaluation system must have been quite a task. So in relation to this issue, what were some areas where we had to exert a lot of force, or where there were hurdles, but you were creative to overcome such hurdles and bars? And I think if you could tell us about that, our audience would be greatly interested. So could you talk about that very briefly? I went to town halls. And I had fireside chats, a small group sessions, and it was the age of COVID, so we used video. So people were afraid about dispensing with the earnings quota because our bonus is related to earnings. So I said it is because earnings were important, so we dispense with the earnings quota. It's impossible to experiment if you're afraid of failing. So we dispensed with the earnings. You might say client first, but if there are earnings quotas, marketing is about solving clients' issues and to be remunerated for that. And and we have to be thorough about this. It's about solving customers' problems. If you have quotas first, you would calculate backwards from the earnings target. So that's not client first approach. So we had to have a thorough discussion on this. And employees should be dispelled in terms of their worries to serve their customers in order to solve their problems. I said it was just because we considered earnings to be important that we dispense with earnings targets. And so it's not like managing restaurants. The cooks are not thinking about earnings. They want to cook good food that the customers would enjoy. And the restaurant manager must manage the finances, and they have to pay the wages. But the management would manage the profit and loss, and into the aggregate of individuals' targets should be the entire target for the company. And we wanted the frontline people to listen to the wish list of the customers and to provide solutions for this. And the result would be the earnings. And we wanted the people in the front line to concentrate on resolving customers' wishes. And so we tried to do a thorough job on this. I spent about a year and a half making this, cascading this down the organization. Thank you very much for your very valuable input. Lastly, Mr. Hamada, if that is the case, in the past 3 years plus or 4 years you've been engaging in this business, do you feel that there are still bars and hurdles which remain? Could you talk about that as well? Overseas wealth management, Morgan Stanley is a good case in point, including that we feel we've delayed in technology, although we feel that we've tried hard in this area as well. Technology is where we're falling behind. The basic infrastructure cost is considerable. So if we want to be efficient in terms of our operation, technology leveraging management, marketing management is what we want to do, but there's still things lacking. So improving operation flow and also improving efficiency is a major hurdle and bar. Thank you very much. Turning to you, Ms. Kito, from a different perspective, private wealth. In private wealth, to have AUM broadly in overseas and on the domestic scene. That is what you're doing, especially overseas, in order to channel investment overseas. If you're targeting domestic individuals, there are hurdles, tax system, and also regulations related to investment. So are there unique challenges to Japan? I suspect that this must be the case. From the standpoint of an expert, could you point out some of the uniqueness of Japan in this regard?
Thank you. From the tax system perspectives, there are several challenges that need to be resolved. Broadly, on the income tax front and inheritance tax front, there are challenges in asset management for the high net worth. In terms of income tax, it is very well known that the tax rates are overly high. On top of that, there are categorization of incomes. There are 10 categories of income, which is quite many. And in between those buckets, it's difficult to do aggregation. So very illogical conclusions are reached in terms of tax payable. If you can take a look at this diagram, when it comes to publicly listed stocks and public bonds, tax reform was done in a positive manner 10 years ago, and it was converged into one bracket, and aggregation was possible. And it's now a flat rate of 20%, and losses can be carried forward, although it's only up to 3 years. So NISA and specified accounts were new systems that have been introduced, which raised momentum in the past couple of years, which is well known to you. However, if we look at the other aspects, for example, in the area of non-listed stock or publicly private placement bonds, the tax system is still unfriendly. Regarding capital gains, the tax is a separate income tax of 20% for capital gains, but the losses cannot be carried forward. It has to be reported in the same years. And up to 56% tax is imposed on dividend income. So it's different from listed stock or listed bonds. So for startups or venture, risk capital is at a disadvantage, and I think there is higher momentum to make such investments, but tax system is unfriendly to such investments at the moment. And further, many financial institutions are willing to invest in foreign currency. Please take a look at the bottom line. Exchange rate gains and losses, especially foreign currency deposits, and the principal portion exchange rate gains and losses would be categorized as miscellaneous income, and therefore there would be up to 56% income tax through aggregation. And even if losses are realized, it can't be carried forward. It can't be aggregated with other gains. So there has to be a tax system designing both the exchange rate gains and losses as well, or else it's inconvenient. From Swiss franc to the dollar, exchange rate losses are reported, and even when one switches from corporate bonds to foreign currency denominated equity, although it would fall in the 20% bracket, losses will be recognized. So I would urge financial institutions to submit comments as recommendations for tax reform in these areas. And also, as indicated by Mr. Hamada, why are Japanese high net worth attracted to real estate? When you think about the life stage, imagine when you passed away, you have to imagine the impact that would be caused. So inheritance tax is a major issue in the decision-making process. And in terms of real estate valuation, it's very difficult to obtain the official valuation price. Rather than market price, the official price is set at a lower price than the market price. And if it is the house you live in, then there is devaluation in the valuation. And when it comes to securities, especially listed equity, the market price is very clear, and specific devaluation is not recognized unless it is the equity of a specific company for business succession. So it's quite difficult. Especially after one passes away, there's 10 months between passing away and filing. So there could be fluctuation, and every year there is requests made by trade organizations for tax reform, and we truly hope that such requests are reflected.
Thank you very much. You have described the present status in Japan. In view of these points, countries other than Japan, in other countries, are there cases where there are superior systems or where you feel that if you could incorporate some of the things that are done overseas, it would be good for Japan? Could you talk about these, please?
こちら今見ていただいておりますが、英米独仏先進4カ国との税率比較表になってます。このオレンジになっておりますところが、いわゆる申告分離とか、それから源泉税で終わる。
Orange is separated taxation and withdrawal taxation. And when it comes to security investments, it's either withdrawal or flat taxation just through filing. If we compare the advanced nations, US, UK, Germany, and France, and Japan. But in other countries, there are no countries that have different tax rates between public or non-listed, private. It's only Japan. So even for non-listed products, we think that the same tax system should apply to private investment as public investment or listed securities. And it's not indicated here, but in the case of US or UK, there is no limit. Losses can be carried over. But in Japan, it's up to 3 years, only even for listed security. So maybe that's too short for carrying losses. In the case of startups or venture investments, in Japan, we have the so-called angel tax system. If the government recognized a certain equity as falling into that category, on the condition that it would be packaged with the other equity, you can have up to 2 billion yen of investments where tax credits can be obtained and losses can be carried forward, but only up to 3 years. But the system is not so well known. It hasn't become so rooted. Even ourselves as tax accountants or CPA say that the procedures are too complicated, so much so that we don't recommend use of that to our clients. So maybe the financial institutions who are in the area of selling NISA could recommend that and enable a simpler system where such system can be used in just one click. In the US, there is differentiated tax rate for long-term investment versus short-term. So those are incentives that the governments are offering to encourage long-term investment. And when the Japanese government could do that, maybe there could be offered more tax incentives in Japan.
Sure. Thank you very much. It seems that the bar is very high.
But FinCity has made comments, so maybe that could be included in your commentary.
Thank you very much. Ms. Kito has mentioned about different taxes and hurdles in terms of regulation. I'm reminded this of a new Mr. Hamada. Despite these bars, the wealth and middle market, you have driven it up to this point. Going forward, Japan's high net worth business to make this take root even more. And for the next leap, what do you think is necessary for the business to take the next leap? I learned a great deal from what Ms. Kito has said, and some of my struggles have been addressed. The tax system is such that it's an important edge if we can provide advice. So if there's a follow-up we can provide in terms of tax, we want to learn so that we can provide this. So in the end, it will be a talk between the tax accountant and the high net worth individual. But if I may make one last other point, in effectuating this reform, there was a segmentation and to create a service model appropriate for the company. In the past 5 years, Morgan Stanley has begun to ask for different things. They often talked about wealth, but recently they talk about path to advice, 10 years, 20 years, 30 years from now. to educate the affluent, the high net worth, so that there'll be a continuous generation of the high net worth individuals. We have to think about doing this. Morgan Stanley bought E-Trade, and the model was created successfully. And I feel that segmentation was what we have been doing, and a business model is appropriate for the segment is what we have created. Going forward, we feel that we have to seamlessly connect that. So in what form we could create more high net worth individuals, and to toss that up gradually. That is something that we have to pursue as a business model within the group. I believe what is an important part of our strategy would be the path to advice. Thank you very much. A new logo has been mentioned, path to advice. Please take that home with you. It's a takeaway from today's session. Thank you very much. The high net worth individual markets in Japan, what we have been we've been discussing the challenges, but from the eyes of overseas high net worth individual investors, how do they see the market? That is what I'd like to introduce. We originally were scheduled to have Miss Christina Annie from the Via Fund, and because of circumstances, she is unable to attend. So I asked her some questions in advance. So I have had some answers from her.
First of all, this foundation, Via Talent Foundation, let me introduce the organization. In 2018, in Switzerland, the foundation was established. It's a family office. You often hear the word family office, but who are they? What do they do? When we ask the question, many people can't respond. This foundation does the custody and management of the assets of high net worth families. And what's unique is that they don't just simply do the asset management. They also actively engage in philanthropy projects. Via Talent Foundation portfolio management is based upon 6 segments or 6 themes. And I'm going to introduce to you those 6 themes first. Energy and environment. So that's the first theme. And second, healthcare and wellness. This is the second theme. And thirdly, education. Fourth, impact art. And fifth, media and entertainment. And the sixth theme is technology and security. So, investments that would be categorized in either of those 6 areas will be the subject of their investment. The first question I asked Christina is, in making investment decisions, what's your highest priority? And amongst the investee, is Japan included as destination of your investments? And this is the response I received. Family office does not pursue short-term profits, short-term return. We look at mid to long-range value creation in return for investment, and that it's because that leads to the preservation of the asset. So we do not necessarily only look at listed assets. We look at private assets or assets that would require investment term of 20, 30 years with high risk. We actively look at those choices. So in comparison to short-term investors, our investment universe is quite wide-ranging and bigger in scope. Then, what about Japan? How is Japan positioned in your portfolio? She said Japan is very attractive. Isn't that a great answer? Revitalization, reconstruction, renaissance is the word she used in English. That's what she expects from Japan, especially in the area of infrastructure. And she cites some segments in line with the 6 themes: media, culture, art, education, infrastructure, and healthcare. These are the sectors that she has cited, which attracts her to the Japanese market. Via Talent Foundation. Currently, FinCity.Tokyo is trying to attract projects, and they have made a proposal. They're planning to open an office in Japan to seek investment opportunities in Japan. So that decision has been made by this foundation. And I asked the following question as the second question. So thank you for making the decision to open a Japanese office. In fact, there aren't so many family offices from overseas that cater to high net worth families who have decided to come into Japan. And we're wondering why they don't come to Japan. So what do you think is a high bar for you to decide to come to Japan? What should Japan offer to accommodate the high net worth of overseas to invest in Japan? And the following is her response. First and foremost, the biggest barrier is, as cited by Ms. Kito, law, regulation, tax system, overly complicated, complex, very, very complex, so much so that it's extremely difficult for global investors to understand. So that's the first point. And the second factor was quite surprising for me. When the foundation makes investment decisions, they think about next generation value creation. So if they are to open an office, there would be experts of investments as well as younger generation people who don't have the experience, and at the same time conduct human resources development so that the office can create value for the future generation. So when they open their Japanese office, who should they seek advice from in order for them to establish such an office in Japan? Maybe there is a cultural barrier. So she cited that as the second challenge. But even then, they want to establish an office in Japan because they want to invest in Japan with a timeline of 20 to 30 years. And why did they make that decision? If we are to invite more global investors to the Japanese market, what should we do? You should communicate more comprehensively and more in detail the Japanese economic situation and the current economic standing of Japan. More specifically, there is now signs of inflation finally in Japan, and the aging of the society is taking place. Working population is shrinking in Japan. These are facts that could be quite attractive as investment incentives for global investors. would wonder, why is it exciting that the population is aging and the working population is shrinking? And she cites a very interesting point. When the population ages and working population declines, then that means that Japan would have to rely on elevated productivity and creation of added value. And that is going to be the national government's challenge. So it will not remain only at the corporate level. The nation as a whole will have to tackle those two challenges, or else the national standing will decline. So for investors, it's unprecedented opportunity. So that's why we are going to invest in Japan.
To Ms. Kito, when overseas investors think about investing in Japan, you talked about comparing overseas as seen from Japan. There are regulations and tax issues when overseas investors want to invest in Japan. Could you tell us about these, please?
せっかく
Her foundation wants to open an office in Japan, and she also said that Japan is an attractive market as an investment destination. Thank you for those comments. But regrettably, from the perspective of the tax system, if they come to Japan, there is the risk of being imposed high tax rate. More specifically, in the case of blue chip, well-known companies of overseas come to Japan, they can invest, but mid to small cap or venture, then you have to have asset manager in Japan for them to refer to you those investment opportunities. But the presence of those entities would be deemed that there is basis in Japan, and then there would be 35% corporate tax rate, corporate income tax, as separate tax imposed. Especially worrisome is the investment business limited partnership, which is used by venture capital. Because if you use the IBLP, then there is the risk of yourself being imposed 35% corporate income tax. There are deduction incentives, but the deduction criteria are so complicated that it's difficult to be qualified. And the filing has to be done by the investor. And in Western countries, such systems are non-existent. So that's one factor that makes global investors hesitate. So even if a fund is established in Japan, that could become a hurdle to lure investment from the global market.
Thank you for that. Japanese equities just rising is not sufficient to have investors from overseas.
Right. There are special zone systems. So regarding those who open offices in the special loans, you are given certain advantages by the national government. So global investors who invest in that may be given more tax incentive so that they would not have to pay taxes. That kind of system exists in Singapore. Maybe Japan should introduce a similar system.
Thank you for that. We're running out of time. But Hamada-san, lastly, there are different things mentioned and proposals floated by Ms. Kito from the perspective of the investor. What do you think should be improved so that Japan can become a leading asset management center? What change would instigate that most? Maybe it, in a word, would be difficult to do, but simplified equity price is such that it's EPS times PER. So PER, if it's within a certain range, EPS, if EPS grows, the equity price goes up. It's simple mathematics. If you think in these terms, the high net worth individual business, we can expand that. But If it turns toward domestic asset, it leads to continuous growth of Japanese economy. Presently, it's concentrated on overseas assets. So what is important is long-term, attractive market where EPS can grow. The kind of market where EPS would grow. So if you think in those terms, short-term, easy shareholder countermeasures or equity price measures. Rather than that, we should try to promote behavior based on long-term strategy. And I hope that the managers would communicate effectively to make this happen. When it comes to a buyback of treasury shares or dividends, I don't think that's necessarily good. It's not a short-term measures. You need long-term measures for long-term performance. So communication in this area, I believe the managers would engage in, including the checking functions. And another point, if you look at this, this is often used to talk about asset allocation. And Brinson's portfolio return 90% is due to asset allocation. You might invest well if you cannot beat the person who's the best at asset allocation. So the importance of asset allocation is very important. That I understand very well. The major flow overseas, worldwide, is that the shape is like an hourglass. If you want to take the whole market, asset allocation, even if you could not do that, you could depend on index, and that would lead to generating beta. Index plus alpha in the past was discussed more, but there's no needs there. It's just now they talk about generating beta, and the market average would do in that case. Active ETF is emerging. A passive beta is the major flow, and active where we have to take more where there's a higher degree of active. So active is very, I think, will be very important going forward. If the market is functioning well, the good equities will be bought and the bad equities would be sold. So the active managers, if they could leverage their strengths, that would be good. But if you look at the market, information efficiency is improving. So there's a lot of analysts with regard to large size stocks. So for large size stocks, if it's not easy to generate alpha. So if we look at the things recently, active funds cannot beat the index, and that is being demonstrated. So large cap stocks are important, and so active, unconstrained, easy changes to cash ratio. This distinctive active funds is what we look to. We hope these will emerge. And this was a previous theme: startups and SMEs. Or small and medium cap stocks. It's a treasure, but there are very few who can do the proper appraisal. And so if we can do that properly, I believe there'll be a source of alpha. And also impact fund, including DX. And recently, when we talk to high net worth individuals, there's an amazing needs in the private sector, private equity, a 10-year lockup product, over 1 billion yen, 100 million is the limit. We talk about this, but then new money comes in. And then it's like a private sector as well, private debt. And there's a lot of needs among the high net worth individuals. It's surprising. And so where the degree of activeness is high and alternatives, to combine this well, and also to profile the customers and to cater to the diversifying needs of the customers. The passive is important, but active funds, I believe, will become such that there'll be a lot of variations. And so the private sector, inclusive of the private sector, we have high expectations. Thank you very much. Lastly, active investment challenges have been discussed. It's I feel as if the ball was suddenly battered to us. And lastly, in aiming to become a leading asset management center, the people in finance are truly making efforts, I believe. But it's not only the efforts of the finance people that would lead to Japan becoming a leading asset management center. What Ms. Kito has proposed, regulations, tax, and also finance outside of the financial institutions, the governments and agencies concerned. We hope that these entities would work together. Infrastructure tax regime where investment is possible would be the only path to Japan becoming a leading asset management center. If I was able to convey that message to the audience, I would be very gratified. Thank you very much for your kind attention. Thank you very much to all. Could we have a big round of applause to the panelists and the moderator of this session. This is the last portion, so we hope you will stay with us and give us your attention until the very end. There are two panelists who are with me. We have from Mitsubishi UFG Morgan Stanley Securities Company Limited, member of the Board of Directors, the Deputy President, Mr. Naoyuki Hamada. And sitting next to me is Ms. Kito Akemi, Managing Director of PwC Tax Japan.